Welcome to Word on the Block, the series that takes a deep dive into blockchain and emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast.News. I'm your host and editor-in-chief of Forkast.News, Angie Lau. It is a pleasure to introduce to you right now our next guest. He is David Treat. He is, let me get this right, David, Senior Managing Director and Global Blockchain Lead at Accenture, and equally and as important, co-lead of the Digital Dollar Project. We talked with Christian Carlo last week when the Digital Dollar Project launched the white paper, and so we got a really good sense of politically how this project is very important, why it's important to the American Federal Reserve System, the fiat system for American consumers. But David, I'd love to know from you, from a technical point of view, how this is actually going to function, not only for the average person, but at the Federal Reserve level, and then also for the banks.
Okay. Yeah. No. Well, thank you, Angie, for having me on again. It's nice to see you, and very excited to talk about this project. And it really, part of the excitement is that we've been working on this for years. So our very first project, as we started to build this blockchain business, as blockchain lived in our applied research function in Accenture Labs, and we recognized it was ready to be client relevant and to build a business around it. One of our very first clients was a central bank, and we've been engaged with them ever since. And by necessity and by character, right, they're very conservative, as they should be, because they run key aspects of our world's financial infrastructure and are key players, and being careful and considered and measured about how to implement is key. And so it's
can we say who that central bank is? We know that you work with a lot of central banks, from Bank of Canada to Monetary Authority of Singapore to a lot of other key banks. But I think we can guess. So, but why was it important for central banks that at least have a little bit of that foresight to actually start thinking about it in this perspective and in this space?
Yeah, it's the financial services community overall was really the first to engage in this innovation wave, and to recognize that out of Bitcoin and the cryptocurrency focus, and over the years growing up, and certainly as we got 2008, 10 into the 2010s. Financial services move first and fastest in terms of recognizing the potential of what tokenized value could mean for business processes and business flows. And so the banking system was engaged, and certainly central banks saw commercial banks and capital markets infrastructure players in particular playing, and in as much as money's at the heart of all of that in these transactions, it was natural. It was a natural point of conversation to say that there's a new innovation frontier, there's a new set of capabilities, and you need to pay attention and learn. And they were pulling, right? They knew that this was something important to engage with, and they've really been pulling in all sorts of stakeholders and experts to come up the learning curve. And so
that's really different, because they're pulling. So this central bank from likely the Asia part of the world is pulling this initiative along. And here with the Digital Dollar Project, which would be America's first central bank-backed digital currency, incredible initiative there. It's really being pushed. There is no direct pull from Congress and or Federal Reserve level to pull this technology in. That's the difference that I'm hearing.
Yeah, every central bank is different, and and all of the G20 and the G40, right, will play differently because they're coming at it from different contexts. But the intensity level and the engagement is really quite pervasive at this point. So I wouldn't fully characterize it as just a push or even just a pull. There's been active dialogue, there's been active engagement, much of which will not be in the public domain. again, because of the conservative nature of the systems and the functions and the scope and the groups that we're dealing with. So yeah, it's never as clean as just push or pull. And yes, certainly some regions pushing faster or pulling harder, but it's a mix. If I get back to your question, I mean, you asked a big question around kind of, from Main Street, from the person on Main Street to the, to the core commercial infrastructure, capital markets infrastructure, Fed, Treasury level. There's I suppose one of the key points is that this is not, it's not a panacea, and it's not going to replace all money, certainly in the short term. And it's not going to be it's something that everyone is going to feel and touch and see. In many respects, actually, if we do it right, you'll never know that this is what was behind the scenes. In some cases, you will. But that's where the big focus of the Digital Dollar Project is, around the specific use cases and where it has value and where it doesn't. I think one of the harder use cases, some of the biggest progress that we've made globally in domestic faster payments capabilities and things that we may interact with every day with Zelle or Venmo or PayPal or our ability to just with our bank send money back and forth to each other seamlessly from an end user perspective, working with central bank digital currency. If we do it right, they shouldn't see a difference. It should be as easy for for me to send you $10, or vice versa. It should be relatively transparent. What is transformative is what happens behind the scenes. The gist of that direct token transfer being a single motion, a simple, simpler exchange, versus today where it's me messaging my bank to then message your, and you messaging your bank, and our two banks messaging each other, and it's authorization based and the like. A lot of what's going on is going to be behind the scenes.
It almost sounds like, beyond it being a digital dollar, you're also circumventing what some would argue is our archaic infrastructure, like a SWIFT or CHIPS or FedWire. It would take on some of those characteristics and make it a little bit more frictionless. Is that what I'm hearing from you?
Circumventing is probably not the right word, because I think those core infrastructure players actually have a potential huge role to play, because of course these tokens have to move across a network. We have to be confident that they're secure. We have to have the operational capabilities to make sure that they, that they're going to be safe and sound, and and their privacy is preserved where it needs to be. So I wouldn't, I've seen big engagement from the credit card players, the major messaging architecture players in the financial ecosystem. The recognition of how this gets implemented and the role that that the existing players have in either standard setting or the rails upon which these tokens move, or the ability to protect them while they're in motion. All of that is, has lots of opportunity for lots of the existing players. It gets transformed, and we strip out, if done right, we're going to strip out a ton of inefficiency, and we're going to simplify and modernize architecture. But I wouldn't jump straight to circumventing and and cutting players out, because across the board, I think one of the things we've learned over the past 5 or 6 years is, while that initial mindset and mantra is good to inspire new thinking and to really be transformative, not incremental change, but transformative change. It's great to kind of rethink what would it be completely different. But oftentimes that throws the baby out with the bathwater in terms of the valuable roles that some of the intermediaries play, and how do you rethink those roles. So I think intermediaries and the processes and the architectures change dramatically, but that doesn't mean we're starting from scratch, and that doesn't mean that there's not a role to play for for the existing players. It's I hear you. It always comes back to the middle.
You want to layer on and create efficiencies. So I do hear that. Based on your experience with other central banks, what are the different possibilities of and levers that it actually provides a central bank in a way that it doesn't now?
So I guess again, one of the things that is important to realize is that many of the value pool and the value case is not for the central bank itself. It's for the ecosystem that it's providing a service to in many regards, right? So if we take let's take kind of diametric use cases from two ends of the spectrum. The U.S. is the world's largest originator of remittance payments. And this is frequently people sending money to to family or ones that loved ones that they support, in another country, in another context. Those remittance payments, I think the latest World Bank figures that I looked at, right, on average globally 7%, transaction fee. They can be upwards of the high teens. They can be in the 20. They can be quite costly to the people, and this is charging. It's costly fees for people who can least well afford it and who are trying to do some of the best good with it, right? So the reality of what's driving those costs, it's not spurious cost, it's the messaging cost to be able to have each of the legs of the transaction, the messaging, the reconciliation, the data confirmation, the operational teams. There's a rationale to the infrastructure that's needed to be able to support that. Well, rethinking what could be done if as easily as texting that photo of your kid to mom or dad that's somewhere else, you could just as easily send that token in a single motion and transfer that value. That's the potential, right? So the cost of remittances could be brought way down. Now
I get that part, but if you're asking this to be central bank backed, what's in it for the central bank? What are the characteristics that would really make it attractive for the Federal Reserve to say, this is what we want? We need to digitize the American dollar.
Yeah, so throughout history, the dominant reserve currency has been based on the most functional, useful currency. Right. It's just if you go back to colonial area, our colonial era in the U.S., it was the Spanish real for more than a century, up until the Banking Act of it was 1857. And so it was based upon the fact that the Spanish real was the most pure silver coin. It was lighter in weight. You could actually cut it into pieces. This is the origin of the notion of pieces of eight. It was functional, right? And so because people could trust it and it was functional, it was the world's dominant reserve currency for a long period of time. As we think about all of the digital era that we have created and all of our progress for commerce and education and services and the like that we've created in the digital world, we've just not modernized money to match the digital world and all of that transformation. So the currency that can most quickly match the transformation we've done with everything else as it pertains to online and digital, the currency that is able to serve that digital world the best has the chance to be more widely used. And so does that put the dollar at risk from a reserve currency perspective? Not in the short term, but maybe over time, if something else is more functional, I think it will gain attention. And so from a global monetary, from any central bank's role and responsibilities around monetary and fiscal policy, the use of the currency, how it's used, where it's used, to modernize it and bring it into the digital age, we think is very, very important.
Mark Carney, the then outgoing governor of Bank of England, right in America's backyard, in his last chapter in his role, called for global hegemony to be replaced by a digital currency to essentially fix the global economic system that has been destabilized, as he and many would argue, at the strength of the US dollar. How does that contrast with this initiative here, the digital dollar initiative, the project to have a CBDC of the US dollar? Is that threatened by potentially a globally backed digital currency that would be then the global hegemony currency for the world?
I'm not the right one to comment about the global economic policy dimensions, so I think I'll leave that I will leave that aside. I think there's some really interesting policy and sovereign and cultural and societal questions that are embedded, in that concept. I think the thing that's incredibly encouraging is that the technology now affords us the ability to have those conversations and to challenge orthodoxies and to rethink how the world works and lives. So so our focus is on the potential and inspiring the right level of policy and social and cultural discussions and dialogues to pick what do we choose and what do we value. And at the heart of it, I think I'm looking forward to all of those debates and discussions. I think they are enormously complicated. I think,
you're totally right.
as I'm sure Chris talked about, there's tremendous benefit, that has been derived from being able to price things in a single currency and the relative nature of it. I think the global interconnectivity, interoperability between financial systems is key and is clear. I think the whole notion of how you the notions of domestic versus global financial policy is deeply complicated. I think, and again, I'll go back to, I'm incredibly encouraged that the technological advances, I think, will bring those conversations to a head in the coming quarters and years, and we'll be able to make some different choices armed with a much greater potential. It'll be interesting to see how that plays out.
No, that's, and the reason why I asked that question is because Chris was very articulate in the specificity of the value of the digital dollar. At the end of the day, we're looking at a world, we live in what is, an increasingly a tense world. There's decoupling happening. There's US-China trade tensions flaring up, and it boils down to the ideology of how you perceive money and how we perceive business and peer-to-peer interactions from a financial level, and what power does that give either a central bank or sovereign and or us, right? And so whatever spectrum of the ideology on, it's very clear where America would sit on that. And so, this would be baked into the architecture of this CBDC, the Digital Dollar Project. And so I wanted to ask you, when you take a look at the work that you're doing with other central banks, I mean, these are also ideologically aligned, on the spectrum of free capital markets, very clear sense of privacy protection for, to a certain degree, either, Europe's definitely stronger than America, but certainly we all fall on the same side of the spectrum. And so is there a consistency when you are looking at the white paper of how you've structured this CBDC for America? Does it complement the work that you're also equally doing with Europe and Asia?
Yeah, part of our excitement in participating in this, and part of the reason the DDP came about was discussions with Chris and a recognition of the role that we're playing globally with many of the G20 and G40 central banks. And so we were proud and motivated to bring that collective learning and insight to bear. The US dollar is the dominant reserve currency right now. So it would be odd, right, to not have it be play a central role in the modernization of money globally. I think what's important is that it be done globally, and that I think all central banks need to get there. I believe that this is the future. This is the future and focus. And a necessary part of the evolution of money and currency. I think every central bank will get there. I think that what's really important is that there's plenty of global dialogue around the interplay and the interoperability and the integration of our global financial systems, in the mix. And so to be able to connect the dots, to be able to help each individual country drive their own policy choices, and I think they will be different in many cases. I think they, different values, different current states with respect to use of cash, with respect to with respect to the role that they play within global financial supply chains and ecosystems and systems, and to be able to have a consistency of open standards, of interoperable systems, of common choices that will enable all of the financial infrastructure globally to advance together, even though different choices may be made in different countries and different regions. I think we should encourage that, right? I think if it was all uniform and there was one system and one only one, that's obviously antithetical to true innovation, which comes out of diversity of thought and implementation and the learning and the like. So we're going to continue to work with partners globally, work with different systems, bring our the knowledge and understanding that we're developing as we look through look to and work with each of the different types of implementations that match those particular policy and social and cultural choices. And so we were proud to bring that, we're proud to bring that global thinking and global capability to bear in a U.S. context. Similarly, we're bringing that global thinking to other central banks and other regions around the world.
Do you think that regulators need to now jump in? This is really a private-led initiative. Accenture is, from a consultancy point of view, really working alongside central banks. In this case here in the United States, it's leading, presenting, proposing, right? But at what point at a G20 level, at an OECD level, would the regulators come in and start really shaping the architecture as well?
I'm sure Chris also gave you, one of the other things. I don't want to parrot him or repeat things he said, but it does play out differently in different regions, in different political environments, and so the U.S.'s style of getting anything done, right, is public-private partnership, and so I think different from how it works in other regions of the world, where maybe it's a regulatory framework first, and then private enterprise innovates to the framework. In the U.S., it's much more a history and tradition of a partnership between public, commercial enterprise and innovation and regulatory and public service focus. I think that's valuable. I think that's the way that we've made the most progress and the most in the quickest fashion here in the U.S. We anticipate the same thing happening here. So we'll, with the intent of the white paper is to be able to engage with the stakeholder community, including, the key members of Congress and the Federal Reserve and Treasury and private enterprise and banking and consumer advocacy, experts and the legal community, et cetera. So the engagement's already there. I think it's the ability to catalyze further discussion, to have common language is probably one of the most important things. I think too frequently we talk past each other when we're at the front end of an innovation wave, and our language fails us sometimes because we think we're saying the same things. We have heated debates about what we think is the same thing, only to realize that we were talking about wildly different things. So having a common language, having a forum to get the conversation going. I think the regulators are already involved. I think they're already having the dialogue. I think they're already in with the thinking, and I think it's just now about having more of it, and quickly getting to the stage of piloting. Because I think that is also critically important. I think there's too much. There's only so far we can go with theory and paper and PowerPoint. We have to get to code and feel it, touch it, have it on your phone, learn from that experience in the real world in a very controlled, measured way. We got to get there quickly so that we start to learn. You only learn by doing. Absolutely.
And so when do we see that?
I'm hoping we see that very, very quickly. I think we've already seen it. I mean, in reality, if you look at what's been happening, with many of the certainly core capital markets and banking infrastructure use cases. We've already been modeling the transformation by using an analog, whether it's a stable coin or just merely tokenizing value in pilot use cases or pre-production prototypes. We've already been building systems that are just waiting for the fiat central bank digital currency to be swapped in. Right. So if you look at, I think the great efforts of the utility settlement coin, now Finality, JPMC coin, the Project Jasper, Project Dubin Jasper, right? As the culmination of two central banks actually, directly exchanging, a tokenized fiat currency for the first time between, Canada and Singapore. There's a lot that's already started and underway around tokenization of money, tokenization of value, tokenization of securities, the exchange of the two. So we are seeing it already. The exciting part is to now be able to swap in the actual CBDC token for what we've been using so far.
When might we see a Federal Reserve pilot on its own CBDC?
I hope very, very soon. So
what does soon mean? A year, 2 years?
So let's let me try not to give you a non-answer. From the moment where we were able to say, from the moment of go, right? Of we're ready to pilot something. In effect, we've been seeing, to do something, on something real, something meaningful, something valuable. This technology has advanced to a state where really a lot of the complexity has been abstracted away by the platforms. Our languages are getting better, or we're getting faster. It's getting faster, more secure. It would be easily conceivable that from the moment of go, within a couple of quarters, you could have real working use cases in real world with you and I with wallets on our phones and exchanging tokens in some sort of context. So a first pilot use case can be done in months and quarters. It doesn't take years and more.
I understand the technology is there. Everybody's ready to go. We've already seen test trials around the world, just not here. It just takes flicking on that switch. And that's really not a technology question, but certainly a political one. So I get that point. I think before I let you go, David, this has been really illuminating, and thank you for helping us understand at least a little bit deeper. But what has the response been from peers and the general public? What has the response been, and what do you think is the one thing that still needs to be stressed that you'd like to push people over the line to understand a little bit better?
The response has been phenomenal. We've had just a huge influx of comments and feedback, and people really appreciating the foundation of language and concept that's now, I think, going to better enable the conversations we have going forward. And so we continue to get feedback around it. We'll continue to build on it, but we're really happy in that it has already done what we wanted it to do in terms of inspiring conversation and giving us a common language for which to enable that conversation. So that's been fantastic. I think in terms of what to expect next and what to add to it, I think it's the depth of the policy discussions and questions that is most needed and will be most in focus as to what comes next in terms of, just as an example, the balance between privacy and AML KYC regulation, and how do you thread that needle, and the excitement of our technical choices and the ability to configure the technology to make it a both, not as much an either or, I think is incredibly exciting. So to be able to have that policy discussion, to be able to show how that needle can be threaded so it can be a both, not or, I think is incredibly exciting.
And what kind of pressure does China play, even Facebook play on this project?
Oh, I think there's a global set of activity underway that is just raising the intensity level in a great way to be able to say this is important to focus on, this is important to do, and so I think the more countries, the more commercial activities that get underway and start to be successful, the better, because we need that. We need to push that innovation frontier. We need to get there by learn by doing, learn by experiencing. And so the more activity that gets underway, the better, the quicker we'll get there, and the more informed we'll be as to how to do it right.
So what's the next breaking headline that you're going to share exclusively with us that we can expect soon?
It'll be fantastic, and I will call you first.
I have no doubt.
You'll have to wait. Yeah, you're going to get me in trouble with my marketing lead.
Well, if it has anything to do with a pilot project, I think we're all going to be very interested to see how that rolls out. David Treat, thank you again for sharing definitely a lot more on the Digital Dollar Project. The white paper it explains a lot, but I think we all know that the intensity of this conversation, as you've very notedly remarked on, is increasing, and it is increasing, and let's see if America can play a significant role here. David, thank you for joining us.
Thanks, Angie. Appreciate it.
And thank you, everyone, for joining us on this latest episode of Word on the Block. I'm Angie Lau, Editor-in-Chief of Forkast.News. Until the next time. You know what I'm going to say here, right? Like, comment, subscribe. We hope you do. I'm Editor-in-Chief Angie Lau, Forkast.News. Subscribe for a lot more in-depth conversations. This is what we do for you every day. And here's the next one.